There is so much going on in the real estate market right now. It is a challenge just to keep up. But don't you worry about it. Here on this channel, we are going to do just that. A couple of months ago, Fannie Mae and Freddie Mac, actually I think it was just Fannie Mae, announced that they were increasing the loan limits. So as a result of that, a lot of banks started increasing the loans available to their customers in light of the fact that the loan limits were going to be going up. But now it is actually done. Like as of right now, the conforming limits for 2022 have officially been announced. All the banks have updated all of their paperwork. And when you look at what the new conforming limits are, it is staggering, the increase. We've never seen anything like this before. So I've got an article pulled up. We're going to dive a little deeper into this particular topic. But before we do that, if you are new to the channel, welcome. My name is Brian. I'm a realtor here in the Boston market with Lamacchia Realty. And on this channel, we cover all things real estate. So with that out of the way, let's get into it. Okay, again, this is an article from, I think it was actually, it's on Realtor Magazine, but it was from FHA.gov. And it says the higher mortgage loan limits set for 2022. The Federal Housing Agency announced Tuesday that conforming loan limits for mortgages backed by Fannie Mae and Freddie Mac will jump in most of the country to $647,200, an increase of $98,950 from 2021's limits of $548,250. The higher levels are in response to rising home prices over the past year. The FHFA's House Price Index shows that home prices rose 18.05% on average between the third quarters of 2020 and 2021. The 2022 conforming loan limits are increasing by the same percentage, the FHFA reports. However, in areas where the local median home value exceeds the baseline conforming loan limit, the limits will be much higher, the FHFA said. In higher price locations such as San Francisco and New York, the conforming loan limits for 2022 will increase to $970,800. In 2021, that baseline was $822,375. And then below it here, you've got a map of the United States, and it just shows some of the different areas that have those higher conforming limits. Now, where I am located, let me see if I could turn on a mouse pointer here. Where I am located, I am right up here in the Northeast. So I am in the Boston market. So pretty much all of these counties, Suffolk, Norfolk, Middlesex counties, looks like Essex County as well is also included in there. So, you know, the big counties that are around the city of Boston are all included in this. So that's why this really makes a difference for me in my market. But you can see down here in New York and New Jersey, huge growth here, and looks like right around Washington, D.C. as well. And of course, out on the West Coast, anything from, you know, Southern California all the way up to San Francisco, and a little bit up in Washington State too. Looks like in the Seattle area, and then a little bit of in Middle America, but very much less so. Although in Alaska and Hawaii, they do allow. Hawaii doesn't surprise me. Alaska does, but hey, that's not my market. I don't know much about it. So what will the effect of this be? Having a conforming loan is a big deal for home buyers. What it means is it provides you with the best terms for that loan. So if it's non-conforming, typically you then have to go up to a jumbo loan, or you've got to set up a first and a second mortgage. There's a couple different things, a couple different ways to get around it. But the long and short of it is the best terms are available if it's a conforming loan. Now, at $970,000 as opposed to $822 in my market, the difference that's going to have is, I think, pretty dramatic, right? So now all of a sudden, with a conforming loan, with an FHA loan, you can put down as little as 3%. So you still have to have all of the other qualifications in place. So you've got to have the right debt to income ratio. You've got to obviously have a good credit score, strong income. Like there's a lot of things that also need to be in place. But the long and short of it is this is going to open up the opportunity for many more people to get into a more expensive home. And as a result, it is more than likely going to drive up prices. So this is a big deal. And I know that we've already been seeing that, and it's not surprising to me, but over the past like 45 days, home prices have gone up a little bit, right? And it's much to the surprise of a lot of economists. They're just like, how is that even possible? Well, I'll tell you how it's possible, because people are able to borrow more, right? So if you allow people to borrow more, they will. It's not always the best thing for someone, but given the opportunity, a lot of people will take advantage of it. And it's not necessarily a bad thing, again, because interest rates are so low. I mean, they're still hovering right around 3%. So if I'm a home buyer and I'm looking at this and I look at the value of real estate over the course of time, which is going to appreciate, if I can lock in at a 30-year fixed rate mortgage for 3.25%, maybe even 3.5%, why wouldn't I do it? I mean, I bought my first house back in 1998. The interest rate was, I actually went back and verified this because I remember it, but I actually wanted to look at my documents and make sure that it was true. And I wasn't just imagining this, but it was 7.25%. And at that time I was thrilled. I was like, this is great. 7.25%, because we had friends that were in the 8s. So we thought we got, such a great deal. And if I told you right now that you qualify for a mortgage and your interest rate is 7.25%, you'd laugh me out of the room, right? Because that just is not the reality in which we live right now. So how do you think these new loan limits are going to affect the real estate market in your market? I'd be interested to hear. Make sure that you leave a comment down below. If you did enjoy this type of video, make sure that you smash that like button and also subscribe to be notified of additional videos. Thanks for watching. Take care.